Before you listen to the Tech Talk Daily podcast, I have to ask, are the high levels of uncertainty you're experiencing keeping you from making bold moves? Are you able to clearly see and act on the game-changing opportunities the pandemic has created? I'm Daniel Burris, serial entrepreneur, global technology futurist, and disruptive innovation expert, and right now, you have a choice to make. You can react to problems and disruptions after they happen, or you can learn to accurately anticipate disruptions before they disrupt and identify and pre-solve problems before they happen, giving you the ability to turn disruptive change into your biggest advantage. If you want to take control of your future and make a significant impact now and in the years ahead, join thousands of leaders from around the world by becoming a member of my Anticipatory Leader System, where you'll get the latest insights, processes, tools, and coaching that will give you the certainty and confidence you need to actively shape a better future for you and your organization. Go to techblogwriter.co.uk and click on Daniel Burris.
Welcome to the Tech Talks Daily Podcast, where you can learn and be inspired by real-world examples of how technology is transforming businesses and reshaping industries in a language everyone can understand. Here is your host, Neil C. Hughes.
Welcome back to the Tech Talks Daily Podcast, where every day we focus on how technology is transforming our life, business, or even world, and try and bring a more positive narrative to your day. And it has been a tough year, but the good news, of course, is it's nearly over and 2021 is just on the horizon, and it can only be better, right? If we do have any startup founder listening today, I want to delve into the world of investments into tech companies. And many of you listening will know that Bain Capital is one of the world's leading private multi-asset alternative investment firms with approximately 105 billion of assets under management that creates a lasting impact for their investors, teams, businesses, and their communities in which they live. But did you know that Bain Capital Tech Opportunities is aiming to help growing technology companies reach their full potential, and the focus on companies in large growing end markets with innovative or disruptive technology where they believe that they can support transformational growth. And their teams focus on 5 priority sub-verticals: application software, infrastructure and security, fintech and payments, healthcare IT, internet and digital media. So I invited Darren onto the podcast today, who joined Bain Capital back in 2005 and is a managing director on the Bain Capital Tech Opportunities team, which is based out of Boston. Enough scene setting from me. Buckle up and hold on tight so I can beam your ears all the way to Boston so we can speak with Darren from Bain Capital Tech Opportunities. So a massive warm welcome to the show, Darren. Can you tell the listeners a little about who you are and what you do?
Sure. My name is Darren Abrahamson. I'm a managing director at Bain Capital, where I co-head our Tech Opportunities Fund, which I helped launch just over a year ago.
Fantastic. And for people just tuning in, of course, Bain Capital is one of the world's leading multi-asset investment firms. And we understand that it is both private equity and ventures business. But where does Tech Opportunities fit within that spectrum? Just for anyone listening that are hearing about you guys for the first time.
Yeah, sure. So Bain Capital has always been very active in the technology sector, and frankly, we've always been very much growth-oriented investors. Since our founding days in the 1980s, technology has always been one of, if not the largest areas of focus for us as a firm. And as our funds grew and evolved over the years, we ended up with a very active and successful venture capital business named Bain Capital Ventures, and a very active tech practice inside of our large cap private equity business. But a gap had emerged between the two for larger, later stage growth equity investments, as well as for smaller mid-market buyouts. And so we often found ourselves, without even really trying, coming across very interesting companies where we had deep and relevant sector experience and felt like we could really help those companies grow and expand, but we just didn't have a natural home for them in either of our existing funds. And so the idea for Tech Opportunities is really to fill that gap. So we can be flexible across both minority growth and control investments. We collaborate a lot with and partner with both our venture and private equity colleagues. And now as a platform, we have an end-to-end offering in technology so that we can support companies literally from the seed stages with our venture business through to growth capital with our fund, and then into larger buyouts, and ultimately the public markets, as we have a public equity fund as well that has a deep technology focus.
And when looking at this space, it really does seem that growth equity seems to be an increasingly attractive strategy for investors. Could you expand on why you think that is right now?
Yeah, so let me start by saying that everyone has their own definition of what growth equity is and isn't, and so it can encompass a pretty broad range of investment types. But I think your general point is spot on, and I'll give maybe a couple reasons that come to mind for me. So first of all, and this is sort of at the highest level, and applies to technology overall, not just growth equity, but venture, private equity, the public markets, is that we're in the midst of a multi-decade period where technology is fundamentally reshaping every industry in the world. You know this as well as anyone, and you talk about it a lot in your podcast, and I'm sure we'll get more into it, but you look at healthcare, education, retail, financial services, automotive, you name it. People talk about digital transformation, software eating the world, whatever phrase you want to use, but it's driving enormous growth and opportunity for software and technology providers, and also, by the way, for companies who can leverage technology to fundamentally reshape the markets they operate and compete in. So that's sort of at the macro level. Because of that, but also because of a number of other factors like the rise of the public cloud, subscription business models, more rapid sales motion, easier implementation of technology, just the ubiquity of mobile devices to access that technology. All of these things have, in my view, dramatically reduced the barriers to starting and scaling companies. And so there are just a lot more businesses out there who are finding product market fit and reaching a level of scale where they become appropriate for growth equity type of investments to help them kind of pour fuel on the fire, if you will, in terms of sales and marketing spend or new product investment to expand into new areas or to expand internationally through M&A, whatever it may be. So I think the number of opportunities that are sort of ripe for this kind of investment is larger than it's ever been before. And then finally, and I think, you've seen this across asset classes in technology, but it's just been a really good place to invest. We've seen a lot of market growth for the reasons I just described in a period where the overall macro environment has been more muted. And we've been in a period of rising valuations for tech companies as well, particularly the highest growth tech companies. And we can talk a lot about why that is. But naturally, therefore, returns have been very compelling. And when you see that in any segment of the market, you see more capital chasing those returns. So whether it's existing investors raising larger funds or new players entering the market, you've seen venture capital firms say, wait a minute, all of these companies that we've backed are raising money from other parties, and those folks are doing really well. Why don't we raise growth funds? Or public equity investors saying, look, a lot of the value is being created before these companies ever reach the public markets. Why don't we move backwards into late stage private investing? So I think there's a lot of capital focused on the space because the returns have been good, and there remain lots of interesting companies to help back and grow.
And on this Daily Tech podcast, I speak with a different industry leader every single day. And a question I've got to ask you as well is, how has COVID affected the world of tech investing this year? Because I've spoke to, like I said, people from different areas, but I'm interested in how it's affected your industry too. Is there anything you can share on that?
Sure. So we could spend a lot of time on this topic, but first I just want to say, obviously, the whole COVID situation is horrible, and so many people have been impacted, in health and employment, and families losing loved ones. So I don't want to seem like, COVID's been a positive thing. It certainly hasn't, and it's tragic. Yeah. That said, I think the tech sector has, by and large, come through at least this first phase of COVID probably less impacted than most other sectors. So what we've seen from an investment perspective, there was a brief period in kind of mid to late March where the market definitely froze. There was a lot of uncertainty. Businesses were just trying to navigate through the shift to remote work and trying to figure out what was going to happen through all of this. And so things did freeze for a little while. And then you had a short period where, when markets were kind of at their lows and people were concerned about the outlook. And the only real activity we were seeing was more what I'd call sort of confidence capital. So these were more debt-like investments, companies that really needed liquidity to get through the crisis. And that actually didn't last that long because the markets rebounded so quickly. And then, sort of mid to late April, we started to see growth investments come back and become actually quite active. And just in the past few months, we've seen a lot of the buyout deals come back to market, including many that were kind of put on hold earlier during COVID. And I think that speaks to people in the tech industry sort of feeling like they understand the dynamics, they can reforecast their businesses, they've got more visibility and outlook. And so from a deal activity perspective, we've certainly seen things come back probably faster than most people would have thought. From an investment process perspective, obviously, everybody has had to adapt to the new reality of doing due diligence remotely and meeting people over Zoom and getting comfortable with that dynamic, which can be challenging because at the end of the day, a lot of times you're investing in people at this stage, and so you've really got to find ways to build relationships, without being in person. But generally, people seem to have kind of gotten over that. And then from a valuation perspective, you've seen tech valuations actually go up through this, which I think is a combination of better performance, resiliency through the COVID period, perhaps better than people may have feared, and then a lot of sectors that have actually benefited from COVID. If you think about working from home and collaboration tools and ed tech and other areas, you've seen a lot of companies that have actually experienced accelerated growth through this period. So overall, it's been probably a more robust environment than we would have expected, if we were talking back in March, April.
And I also think on the subject of COVID, if we were to go back to, January the 1st this year, there's a lot of excitement around a new year and a new decade. And if we look at our needs and wants then compared to what they are now, I suspect there would be a few changes along the way. So I'm curious, what are some of the sectors in tech that make smart investments in view of how the world has changed this year? And why do you think that is?
So there are so many interesting areas right now. You think about some specific segments where COVID has had a very obvious and direct positive impact. So think education technology, where distance learning has created just massive demand for new technologies and tools, or healthcare with telemedicine, or remote work and collaboration tools. Some of these I think will be more temporary. Others will be more permanent. Clearly, e-commerce, as another example, has been transformed in a way that I think is lasting and fundamental. That's not to say, people won't eventually go back to stores. I think they will. But for a lot of items, a big, portion of the population has now realized just how well and efficiently e-commerce works. And I think that will, change behaviors going forward in a pretty meaningful way. And then you've got a lot of areas where, perhaps the immediate benefit isn't quite as obvious as something like e-commerce or ed tech, but I think no less powerful. So you think about the cloud, and I think the big cloud players and the ecosystem around that are going to be massive winners as the shift from on-prem to cloud accelerates, and people sort of realize some of the unseen costs and limitations of on-premise technology when all of a sudden everything moves remote and scalability changes, or cybersecurity, where remote work and access has opened up a whole new set of attack vectors and risk areas for fraud and hacking. And so I think there's a set of segments of the market that have just exploded during COVID because there's really been no alternative. There's a set of areas where I think there'll be long-term fundamental change, and COVID has accelerated trends that were maybe already underway. And then I think there's just some fundamental, call it underlying infrastructure for the technology to support all those areas that I think is going to be a big benefit. But you've certainly seen technology play a critical role in every aspect, I think, of how both individuals and businesses have been able to manage through this period.
And of course, another big change is, especially in areas such as Silicon Valley, where employees were paying $3,500 a month for a one-bedroom flat, are now working from home and thinking, I don't need to be in the city anymore. I can work from anywhere. And equally, the expense of doing business in California is particularly expensive. And a few weeks ago, I spoke with the guys at GPEC in Phoenix, and they were talking about how they were thriving by encouraging businesses and employees to relocate to the area and have a better standard of life. But outside of the West Coast, I'm curious, what are some of the target geographies outside of Silicon Valley, such as the East Coast, New York and Boston areas? Is there anything compelling about other technology environments in those kind of geographies too that you've come across?
Yeah, so I would say that the traditional areas that are considered kind of the hotbeds of technology, innovation, and investment are obviously Silicon Valley and the Bay Area more broadly, New York and Boston. But what we've seen is, while there's certainly lots of terrific companies in those areas and great ecosystems of talent, development and leadership and capital, there are, also a lot of really great companies that are being built outside of these major cities as well. And so one of the things that we've spent a lot of time on is trying to focus on other parts of the country where, you may have more under the radar founders, people who have built really high quality businesses, but they've done it without a lot of capital and without a lot of the buzz maybe that sort of the unicorn companies in Silicon Valley might have. But we often find that when these entrepreneurs decide to look for capital partners, they're really seeking more than just capital. They want strategic and operational support, which is sort of fundamental to Bain Capital's DNA and something we can uniquely provide. And so there's a really good match there between the opportunity set and our ability to differentiate. And we talk a lot about our orientation of being, the partner of choice to our management teams. And that just seems to matter more sometimes outside of some of these major tech hubs relative to just valuation. So we spend quite a bit of time, we've made investments in Lincoln, Nebraska, in Austin, Texas. We've looked at a lot of companies in Utah and Denver and other parts of the country. And so this has been going on for some time, I think, because of some of the challenges with, with cost of living in areas like Silicon Valley, and frankly, just competition for talent with some of the very large tech companies. And so we've seen that shift, ongoing for the better part of a decade now. But I think to your point, COVID will probably accelerate that because you are going to see a lot of really talented individuals decide that, they can work remotely, they can work in lower cost areas and have maybe a better quality of life. And that will lead to more innovation in some of those markets. That doesn't mean, by the way, that I'm sort of bearish on these major cities. I actually think that when COVID passes, I'm definitely more of a bull on the rebound of the Bay Area and New York and Boston and places like that than perhaps some of what you read out there.
Cool. And can you also tell me a little bit more about each of the Tech Opportunities 5 priority sub-verticals? I mean, why did each make sense, especially in light of changes that have occurred in the last several months?
Yeah, so stepping back, just given the size and scope of the technology market, we felt it was really important for us starting this fund to focus on areas where we, both as individuals on our team and more broadly across our firm, have a lot of depth and experience and feel like we can add real value. And so consistent with where our venture capital and our private equity colleagues focus and the backgrounds of our team, we've really honed in primarily on enterprise software, B2B enterprise software. And so within that, we have dedicated teams who focus on specific areas that may be related to the nature or type of software or the specific end markets. So we've got a team focused on application software, which for us includes some horizontal, but also a lot of vertical market software, separate from a team that focuses on infrastructure and cybersecurity, which has sort of its own set of trends and dynamics that you really need to be expert in to invest in that segment. And then healthcare IT, which again is a large market with a lot of its own nuances and dynamics that you need to understand. So those are 3 areas of focus for us. We also have a lot of depth as a firm in financial technology and payments. We've invested across the globe in everything from disruptive startups to some of the largest payment processing companies in the world. And so that's been a key focus area for us as well. And then finally, we will look probably more opportunistically at internet and digital media companies. It's a smaller part of our effort relative to enterprise software. We tend to be a bit less focused on B2C businesses, but there are great opportunities in all of these. So really it's about prioritization and themes and focus and really picking areas where we feel like we've got a right to win. And
a cloud guru from the list is particularly interesting. And we are seeing the cloud market grow rapidly at the moment. Do you think that is partially due to the increase in remote working? Yeah, so I think there's clearly been an accelerated shift to the cloud and will continue to be so as a result of remote working and just all the dynamics we talked about earlier as part of COVID. When we made the investment in a cloud guru, this was pre-COVID, and we felt even then that cloud was just still in the very early innings and perhaps had more room to run than was generally understood. And so for public investors who have that thesis, you can go and buy Amazon or Microsoft or Google, but for private investors like us, we've got to find smaller growth companies who stand to benefit from some of those trends, and who, by the way, are not going to get just beaten out by those big incumbents. And so one of the areas we identified was that along with the growth in cloud, there was a real skills gap emerging with a lot of companies unable to move as quickly as they'd like
to the cloud because they just didn't have the talent or the people. And so A Cloud Guru is the clear leader in helping individuals and increasingly enterprises learn how to operate in the cloud. They've built a very modern approach that's hands-on learning by doing. So it's engaging content, it's fresh, it's instructive. You're actually interacting as if you're operating in the cloud while you're learning to advance your skills. And so they've built this incredible community of developers who have really advanced their careers because of the product. And what's exciting to us about that is not just the fundamental macro trend of the cloud, which we talked about, but I think this just reflects some of the areas I was talking about earlier, the ways in which technology is fundamentally reshaping markets like education. The alternative before A Cloud Guru came along was to sit in a classroom and listen to an instructor sort of teach you how to operate in the cloud. And you compare that to being, on your own time, fitting into your own schedule, interactive, learning with much better content and engagement. And it's really no comparison. And so that's the kind of example of the types of opportunities that we think are exciting.
And BioCatch sounds quite fascinating too, especially in the current climate. So can you tell me a little bit more about the technology there? And I'm also curious, have you seen any trends in fraud and cybersecurity as a result of the pandemic too?
Yeah, so this is such a cool company. One of my favorite ones to talk about. BioCatch came out of the Israeli army, obviously, like many cybersecurity related companies, where they had developed a very sophisticated behavioral biometric algorithm. So this is using AI and big data in the case of the army to detect and identify terrorists and bad guys. But they realized that you could use that same approach to basically confirm that somebody is who they say they are. So when you go on to open a bank account or do an account takeover or any kind of high value transactions, BioCatch's technology will help the banks underlying those transactions basically figure out that you're not a fraudster or someone hacking the system. The way they do that is they measure literally thousands of things that you're doing when you're interacting with your mobile phone, your app, the website that you're on. So the pressure you're putting on the phone device, the speed at which you're scrolling on the screen, the way in which the angle you're holding your phone at when you type, literally thousands of things that you don't even know you're doing that help them confirm that you are who you say you are. And so some of the hardest and most costly to detect kinds of scams and fraud, BioCatch has a unique solution to help detect and prevent. And that's created just a terrific return on investment for their customers. And to your point, I think we are seeing in the current environment where so much more is being done remotely, and people are accessing so much more technology and proceeding with financial transactions from their homes instead of the offices or going into bank branches and things like that. It's just become a very target-rich environment for hackers and fraudsters. And so we think this is another one of those trends that COVID has and will continue to accelerate.
And what also stands out is you've got Huddle, a sports video and analytics platform, and Hey, a Japanese e-commerce and payments company. And these two obviously are very different businesses. So what are some of the key trends underpinning investments like that?
Yeah, so certainly very different businesses. I think the common themes is that these are both very well-positioned companies with attractive fundamental growth market trends, where we were sort of picked by the management teams to partner with them to help grow and expand. So Huddle, which is the company I mentioned out of Lincoln, Nebraska, is the clear market leader in the sports analytics market. So they process video to enable performance analysis for coaching and scouting and recruiting for everyone from high schools and club sports up to the pros. Nearly every NBA team, for example, uses Huddle. And the management team and the founders of Huddle wanted a partner to come in and help provide capital to really take their business to the next level, to think about, how to leverage their position to move into new sports offerings, broaden the suite of products they could sell to their customers, continue to expand globally, both organically and through acquisitions. And so our thesis there was really to take this terrific platform in a growing market. We believe sports analytics generally are still in the early days, and help them kind of take the business to the next level. Hey is a very different story. Hey was a proprietary deal that came out of a relationship that some of my partners in our private equity business in Japan had built. We've been on the ground investing in Japan for well over a decade now at Bain Capital and have a pretty unique set of relationships and market presence over there. And Hey is a unique business that has two sides to it. It's got a mobile point of sale offering, so think Square as an analog, and then an e-commerce platform for small businesses, so think about Shopify, and a vision to really unify those two and create a seamless offering for small businesses to engage in online and offline commerce. And they were looking to make an acquisition of an online reservations platform to add sort of a booking and services component to that platform. And so we invested to help them with that acquisition and then to continue to scale and grow the business. And it's a really fascinating market and story because it turns out that Japan is really far behind most of the developed world in terms of non-cash payments and e-commerce. People think of Japan as a pretty high-tech country. And if you look at, they were certainly early to mobile phones and other things. But for a variety of cultural reasons, cash is still king in Japan. But we believe, based on our diligence and our understanding of the market, that we're at a tipping point there where a shift to younger consumers driving more and more of the spending, a whole range of electronic money and payment solutions that has come out. The government has stepped in to support that with a variety of incentives to drive cashless payments. And then, of course, COVID has really accelerated things as it has globally, where cash has kind of gone by the wayside in lieu of credit cards and other forms of payment. So Hey is really a macro bet on that play, as well as just a thematic perspective, which we see the continued integration of software and payments being a fundamental trend across a lot of the end markets that we see.
And on behalf of any startup founders or entrepreneurs listening, what are the key pain points that you see with most high growth companies? How does tech opportunities help founders and entrepreneurs alleviate those pain points to pivot to growth? Because both of those things are so important right now, aren't they?
Yeah, absolutely. If I had to pick a couple, I would say the things we see most commonly where founders are looking for support. One is go to market. So a lot of the companies we see have had tremendous success selling their original core product to their original target customer. And that will get them to a certain level of scale. But then you reach a point where you have to think about expanding your addressable market. You've got to sell to new customers in different market segments, or you've got to figure out a way to sell more different products back to your existing customers. And so a lot of times we come in and try to help these companies with customer segmentation. What are the target segments of the market we want to go after, and how do we best sell to those segments? Whether that's building an inside sales engine or creating enterprise sales capabilities. How do we drive a cross-sell motion as opposed to a new logo motion with dedicated hunters and farmers, and then all of the marketing and the process and the systems to support that. So that, I would say, is probably one of the most common areas of challenge and opportunity that we see. A second would be product strategy. So consistent with that approach, when you start to serve different segments of the market and you think about adjacencies, how do you prioritize those? How do you think about the seemingly never-ending list of features that your customers want, but may or may not be willing to pay for, versus investing in new products that you can sell to those customers or to other customers? How do you price and package those? How do you develop business models around those? So that's an area where good data and analysis and just leveraging some of our experience and analogs from other markets can be quite relevant and helpful. And then the third, I would say, is M&A. Many of the founders that we work with have never done acquisitions, or certainly not anything at scale. And that can be a real strategic weapon when you get to a certain point in your company's evolution. And so we can often help with identifying targets aligned with the strategy, help source those companies through our network, and then really dive in and help with due diligence and execution, and most importantly, integration, because that's ultimately the driver of real success with M&A. And so those are some areas where we can help our companies. But I think it's really important for us, we go in with a highly collaborative mindset. And so it's not that we show up with a plan and the company's just got to go do it, or we're going to go do it. As part of our getting to know companies and doing our diligence, we're really trying to align with our management teams and with founders to think about what are the most pressing areas of opportunity for them, where do they and we see the most value to be created, and where can we help accelerate growth and build these companies into bigger, better businesses. And then how can we provide resources to help them go execute against that? They need to run the business. They need to drive the ship. but we just want to be able to provide knowledge and know-how and skills and supporting analysis and people on the ground to go help make it happen. And that's really our approach.
And I'm curious, as a tech investor working right in the heart of this space, you're probably used to seeing tremendous highs and tremendous lows, like a big roller coaster ride. But it has been an incredibly difficult year. But what makes you hopeful about the road ahead? And where do you see tech opportunities going from here?
So what I love about tech is it's such a dynamic market. So literally every day, someone on my team will surface a new company that's doing something just really innovative and cool and building something special that's serving customers in a unique way and creating value in a market and ultimately has the potential to become a great business. And so the range of ideas and opportunities is tremendous. And the pace of change seems to be accelerating. That was true before COVID. It's been true during COVID, and I think it'll continue. So there's just always new themes, new trends, new ideas and opportunities, and the upside, for founders and entrepreneurs as well as for investors, if you can find the right companies to back, and if you can really help them kind of grow and accelerate, is really exciting. And surely we're going to have macro cycles and valuation cycles, but I firmly believe that technology is going to be a very compelling place to invest for a long, long time. In terms of the Tech Opportunities Fund, we're really just over a year into our formation, and so we're heads down, focused on investing our fund thoughtfully and maintaining discipline in this environment, working with the companies we've invested in to add value, and ultimately just trying to deliver great outcomes to our investors. It is a fast-paced and competitive environment, so we spend a lot of time thinking, not so much about big changes and dramatic things we might want to go do in the future, but more about constant improvement. How do we get that much better at sourcing and identifying interesting companies to invest in? How can we refine and improve our investment process and our decision making and learn from our mistakes? And most importantly, how can we leverage our platform and the resources that we have as a firm to add even more value to the companies that we ultimately partner with? And so it's really more about this kind of constant drive to get better and find little edges where we can see opportunities that others can't, and then help those companies really, really grow and build.
Excellent. Well, thank you so much for joining me today. I'm conscious we've covered a lot of ground. So for anyone listening that would like to find out more information about anything we've talked about, or even reach out and contact your team, what's the best way of doing that?
Again, thanks for having me on. And folks can always visit the Bain Capital website or Bain Capital Tech Opportunities.com, which will go directly to our fund, where you can see our team and the investments we've made. And there's ways on that site to reach out and contact us as well.
Well, I'll add all those links to the blog post that will accompany this episode, just so people can find you nice and easy. And I think a lot of people will be familiar with Bain Capital, but not as many with Bain Capital Tech Opportunities. And that's one of the reasons I was excited to get you on today. So thank you so much for sharing that with me.
Thank you for having me. Really enjoyed the conversation, and obviously incredibly interesting times in the tech world. So hopefully this is relevant for your audience.
I love how Bain now have this true-to-end technology platform that enables them to invest from seed stage companies all the way to billion-dollar-plus buyouts. But I also enjoyed learning more about Bain Capital Tech Opportunities too. But if you are a VC firm or a startup founder, I would love to hear more about your stories, your year, and what you thought of today's conversation. As always, email me, techblogwriter@outlook.com. My website is techblogwriter.co.uk. Let me know what you thought. Keep your questions coming in. If you want to appear on the show, let me know as well. But get in quick, because I think we're currently booked up till December the 5th. So if you want to come on this year, I'd send that email sooner rather than later. But apart from that, just a big thank you to each and every one of you for listening. And until next time, don't be a stranger.
Thank you for listening to the Tech Talks Daily Podcast with Neil C. Hughes. Remember, technology works best when it brings people together.